Hello viewers and welcome to our channel. Apple shares reportedly jumped to a record high territory in its last quarterly earnings report. This has gotten investors wondering if Apple stocks are a buy right now. Today, we'll be talking about the factors that make Apple a great stock to own. The world is currently in the digital age, a period characterized by a huge transformation in nearly every aspect of life in comparison to previous eras and ages. Electronic tools, systems, devices, and resources that generate, store, or process data have undoubtedly made our lives far easier and better, and billion-dollar tech businesses have been built from these over the years. According to Forbes, while other industries continue to bear the brunt of the 2020 crisis, many tech corporations are already emerging from the disruption and returning to full strength. Technology's influence on the global economy continues to grow. In their World's Largest Technology Companies 2020 list, the renowned business magazine also cited Apple as an industry leader and mentioned Apple's praiseworthy reoccurrence on the list. The American multinational technology company Apple Incorporated was created on the 1st of April 1976 by Steve Jobs and Steve Wozniak. The latter permanently left the company in 1985. Despite being an American business that started from a garage, Apple has become a household name all over the world. Apple burst onto the world of technology with the introduction of the Macintosh in 1984, taking the personal computer mainstream. Today, they design, manufacture, and market smartphones, personal computers, tablets, wearables, and accessories worldwide, and the company is managing to grow even in one of the toughest years on record. Their perseverance isn't a big surprise, seeing as the company has gone through financial difficulties and tough changes in times past, which they came out on top. In 1985, Jobs was forced out of his own company by the then Apple CEO John Sully after an epic power struggle, only to return when the company got into deep trouble in 1997. On his return, Jobs oversaw a great lineup of innovations including the iMac, iPod, iTunes, iPad, the App Store, and the biggest driver of Apple's modern success, the iPhone. The 2007 release of the iPhone set in motion a practically unstoppable momentum for the company that continues to the present day and helped him build Apple back to prominence. The game-changing smartphone sparked years of massive growth and created a loyal base of customers willing to buy Apple products and services. Presently, the company could be on the brink of a major upgrade cycle with its first 5G iPhones. The iPhone 12 series, due out in the last quarter of the year, will include the company's first 5G handset. Apple's supply of next-generation iPhones will come a few weeks later than the typical late September launch period, Chief Financial Officer Lucia Maestri told Analysis on July 30th. This is suspected to be as a result of market uncertainties related to the 2020 crisis. In the June quarter, iPhone sales climbed 2% to $26.42 billion. Mac computer sales jumped 22% to $7.8 billion, and iPad sales leapt 31% to $6.58 billion. The work from home and school at home trends driven by the COVID-19 pandemic fueled the gains in the product categories. Apart from gadgets, lately two businesses have given Apple's sales and profits a boost: services and wearables. Apple's services include the App Store, Apple Care, iCloud, and Apple Pay. The newest member of the services segment is Apple TV+, the company's streaming service, which not only garnered the first Emmy nominations this year, but also reportedly saw a growth in new viewers from the blockbuster World War II film Greyhound, starring Tom Hanks. Although Apple is giving away free one-year subscriptions to Apple TV with the purchase of a new Apple device, consumers may keep paying subscriptions to tune into the latest shows, a much more regularly reoccurring source of revenue than iPhone purchases. The success seen in the services segment is a different side of a greater advantage enjoyed by Apple, which is the network effect, a type of long-term competitive advantage that investors look for when seeking stocks that are built to thrive for years to come. Apple wearables include the Apple Watch, AirPods wireless earbuds, and Beats headphones. It also contains the Apple HomePod wireless speaker and other miscellaneous gadgets. This unit saw sales jump 17% to $6.45 billion in the June quarter. Apple stock has an investment banking division, IBD, relative strength rating of 96 out of 99. That puts it at the top 4% of stocks over the past 12 months. The best growth stocks have a composite rating of 90 or better. Despite a global pandemic, Apple stock is up more than 80% in the last 12 months. And on August 19th, Apple stock became the first to reach a market cap of $2 trillion. Longtime Apple analyst Gene Munster said Apple stock could reach a $3 trillion market cap sometime this decade. The fact that Apple can instantly deploy new software and services to nearly 1 billion active iPhone users and hundreds of millions of other Apple devices is a self-perpetuating cycle that helps to virtually guarantee the company will continue to thrive. The more people using Apple products, the more time developers spend making fun and useful apps to go in the App Store, which in turn keeps current customers on the platform and attracts new ones. Apple is a great company. It's one of the world's biggest cash cows. And even in the midst of a global pandemic, Apple continues to churn out profits for its investors. The company will be around for a long time, and this fact alone gives Apple shares value. Investing in stocks is one of the most effective ways a person can build wealth over the long term. You own a portion of a public company when you own a share of stocks. And when those companies do well, the investors make money. In fact, people looking to save for retirement or achieve other long-term financial goals should consider stocks necessary. But what should you look out for when buying stocks? What makes a stock good or bad? Here are 3 things to consider. 1. Price. The first and most obvious thing to look at with a stock is the price. How much will it cost to buy a share of this company? Now, it's important to note that prices should not only be viewed in context. Many companies will split shares once they reach a certain level, thus reducing the price but increasing the number of shares available. Other companies never split, so a single share could go for several $100s or more. But the price, especially when matched against historical prices, will determine how many shares you can purchase with the money you have. Apple's stock has split 5 times since the company went public. The stock split on a 4-for-1 basis on August 28, 2020, a 7-for-1 basis on June 9, 2014, and split on a 2-for-1 basis on February 20, 2005, June 21, 2000, and June 16, 1987. When you evaluate stocks, knowing the price of shares and their history will help you determine if you're getting a good value when buying. 2. Market capitalization. Bigger is not always best, but if you're looking to invest in a stock that will give you a steady growth without a lot of volatility, the largest companies are often your best bet. A company's market cap is essentially the value of all its shares. Companies with large market caps are often large and diversified enough to avoid being affected by a single piece of bad news. Apple hit a market cap of $2 trillion in August 2020, doubling in valuation in just over 2 years to become the first publicly traded US company to reach the milestone. 3. Revenue growth. Share prices generally only go up if a company is growing, and one of the few ways a company can grow is by increasing its revenue. Revenue is often referred to as the top line, and it's a major indication of whether a company has been successful. It's important to not look at revenue as a vacuum. Instead, look at the increase or decrease in revenue from one quarter to the next and 1 year to the next. A positive trend line bodes well for the stock prices, but if revenue is flat or declining, it's important to find out why before investing. On the 30th of July 2020, Apple announced financial results for its 3rd quarter. The company posted quarterly revenue of $59.7 billion, an increase of 11% from the year ago. Apple's broad-based momentum during an uncertain time, its products' increased relevance, and promising prospects for the tech giant services and wearables segment show why the stock remains a good long-term bet for investors. Thank you very much for watching. Leave a thumbs up on the video if you enjoyed it. Let us know your thoughts on Apple stocks in the comment section below, and stay tuned for more amazing investment tips. Bye for now.